And we're live for another TNT Entrepreneur Education session here in the Prairies. I'm Jesse Weeb, your community development lead. We're really pumped up here at Startup TNT. We got last week's top 20 pitch nights for agri-food, clean tech, life sci. Check those out on our YouTube page. So the companies are now deep in due diligence. They're also hammering out there to get momentum going, right? A big piece of what happens during the summit is companies are out there making sales at the same time that they're raising capital. And most of these companies are business to business. So we thought who better to come in and talk to the top 10 companies and other folks in the community here with Startup TNT about corporate selling and sales processes than our friends at Plug and Play. And I'm very pleased to have today Jacob Granger here with me. Jacob is the Senior Associate of Plug and Play Canada's venture team. And prior to joining Plug and Play, he was the first employee at a Canadian biotech technology startup called Anveric Biosciences that is now listed on the NASDAQ. The company was acquired by Anveric, right,
Yeah,
Jacob?
that's right. Yeah.
That's right. There we go. He's also held an operator with some health and biotech startups, and was a graduate of the University of Calgary. So, homegrown investor now working with Plug and Play on their venture team. Great outfit, and I will let Jacob take it away and introduce our two panelists for today's session.
Awesome. Thanks so much, Jesse. It's great to be here. Thank you all for joining us. Really excited to have an engaging discussion with my friends Kelly and Loren about corporate startup engagement today. Like Jesse said, I'm a senior associate at Plug and Play, based in Calgary. And Startup TNT asked us to discuss this topic with you guys, work with a couple of our collaborators to have a conversation around this topic because startup corporate engagement really is Plug and Play's bread and butter. It's sort of the key piece of our business model, and it's sort of what everything revolves around. And so if you don't know Plug and Play, it was founded in the early 2000s in the Bay Area, as a result of our CEO, Saeed Amidi's real estate holdings. And Saeed's a very entrepreneurial guy, but wasn't involved in tech at all at the time and happened to get involved with tech along the way because one of the buildings he owns is right along University Drive, close to Stanford. And he leased space to Google, PayPal, Danger, and Logitech in those buildings and got the opportunity to angel invest in some of those companies as a result of being their landlord. And so he started Plug and Play to do tech a little bit more full time. And along the way in his journey, he realized that a lot of what he was doing for portfolio support was introducing the founders he'd invested in to his CEO friends that he was out golfing with or otherwise. And so that really was a piece that he pulled into the Plug and Play business model. And it's really a central piece of what we do now. And so there's three elements to the business model, which are early stage investing, corporate innovation, and accelerator programs. And they all kind of revolve around that connecting startups to major multinational organizations. And we work with wonderful partners like Ecol Electric, where Loren works, and Walmart and Nike and 550 or so others. So really excited to have a conversation with you all today about corporate startup engagement. And I think with that, that's enough from me. Excited to have my colleagues introduce themselves here. And we're going to start with you, Loren.
Hi, everyone. Very nice to see you this morning. I have to say, I love TNT. Last fall was my first time as an investor in the Sector Agnostic Summit. So being on the other side, doing the education panel for you folks, I'm just really excited to be here. A little bit about me. My name is Loren Fishbuck. I guess if I back up a bit, I actually started as an engineer in oil and gas, and from there migrated into doing some work with data analytics and consulting company, working still in the energy sector, but very much on the tech side of things, and worked in business development and a lot of supply chain, a lot of strategy consulting. So kind of seen a lot. And then I joined Ecol Electric. So at Ecol, we are a wholesale distributor of electrical products. So wire, cable, fuses, arresters, the plugs and switches that you have in your house. We distribute that. We have about 65 branches across Western Canada. Fairly big company. We do about $1 billion a year in revenue. And at Ecol, I am our director of strategy and growth. So the way I like to describe it to people is anything that doesn't fall within the day-to-day usually finds itself on my desk. So a little bit of everything, but one piece of that is leading our innovation team. And through that, we engage with startups like Chata, and we move them through for pilots and hopefully scale them. And it's a ton of fun. So very excited to be here today, and I will pass the mic over to Kelly.
Hey, good morning, everybody. Kelly Chernichan, founder, CEO of Chata.ai. I've been in the tech space since, I guess, 2006, 2007, co-founded a company called Circle Cardiovascular Imaging. That was the early days of AI, and we use computer vision AI to segment and do tissue quantification, a number of things, and cardiovascular MRI and CT images. So there's 4 of us who started it. We built it up. Company was acquired by Thoma Bravo, who's a private equity group in the States. That was a few years ago, and we were about, I think, 250 people by the time it was acquired. And at the same time was transitioning over to startup Chata.ai. And what Chata.ai is, it's an embeddable self-service analytics platform powered through a proprietary NLP technology. So that's kind of the technical form of it. But at the end of the day, we're like Google Translate, where we translate natural language to database query language. But we're non-LLM based. We're actually CPU inference, which gives us a quite substantial advantage at scale, especially in the enterprise, which I know is the main piece to talk about today. So we were involved with Plug and Play. An amazing program for sure, and we've been put in contact with so many different corporates because of it, Ecole being one of them, and we've been working with Ecole and Loren here, which I know we'll talk a little bit about that experience, but yeah, I'm looking forward to the conversation for sure.
Wonderful. No, it's great to have you both here. 2 very experienced, intelligent individuals that are really wonderful to learn from here. So we'll kick off the questions. Loren, we'll start with you. And I want to start right at the beginning. And so if you can, please share some insights that you think founders could benefit from when initially trying to engage with a large organization such as Ecole. What are some things they can do to stand out or get your attention right at the early beginnings of that relationship building process?
Sure. So I think for me, one of the most important things in the beginning is to really seek to understand our problems and help us to find solutions. And I say this rather than the reverse of coming with what your solution is and trying to, fit that, what's the saying, that square peg in a round hole. Really ask a lot of questions to understand our business, and then we can move on to finding solutions. So that would really be my number one. The second one, which would come maybe a bit after, but it's, again, seek to understand the organization's readiness and any risks or constraints within the business. And this will vary, right? It will depend on, are you facing a public or a private company? Are you working with a subsidiary of a public company? That's the case with Ecole Electric's owned by Wesco. So that presents nuances in and of itself. There may be constraints around budget or corporate structure, or just the different hurdles that you may need to jump through to make something successful. So look to understand that. And then the third piece that I would add, and again, this would come after the other 2, is really look for creative ways that your solution, if we've already identified that in fact it is a solution to a problem the organization is experiencing, look for creative ways to piggyback off of existing initiatives, because sometimes that can be a very good way to push through a proof of concept with fewer hurdles to jump over.
Awesome. Thanks, Loren. Kelly, anything you'd like to add there? And also, what do you do to really stand out, set yourself apart from all the other companies trying to pitch to large enterprises out there, and make sure you're not being a square peg that's trying to fit into a round hole?
Well, I mean, it's kind of a 2-stage pro. One, you got to get the interest, so you need some type of a hook. especially if you're, presenting or pitching, or you get that elevator pitch. To answer your first question, I mean, most of the things Loren mentioned is absolutely critical. I think it's a little bit, cliche, but people often forget about, we're all excited about our own solutions and we know the generalized value proposition, but every organization has their own reality of what a problem is to them. Even if they have the problem, they just don't know it yet as well. The only problems that they're going to care about are the ones that the organization has talked about that they want to solve. So I agree with Loren there for sure. And then the other thing you have to recognize as well is those hurdles she talked about too. There are a lot of hurdles, especially a lot of hurdles for new startups to get into an enterprise. Right? There's the old adage. Well, back in the day, it was you never get fired for picking IBM, and kind of now it's you never get fired for picking Microsoft. So you not only have to have a better solution that works better and fits the problems, you also need to ensure that your champion has the lack of a better term willpower and want to push things through, because it's a bunch of extra overhead for the champion as well, a bunch of extra battles that need to be fought. So you really have to align well that way. Now, how do you stand out? You got to get the hook right off the bat, because you're never going to get to the point of finding out an organization's problems if you don't have the hook. So the one thing, if you're presenting or pitching, that I can say now, versus I guess a year or 2 years ago, don't pitch yourself as an AI company if you're not building your own stuff, right? If you're not building your own stuff, if you're just using somebody else's API and you're pitching yourself as an AI, enterprises are getting smarter and they will see right through it. It's okay to say you have AI empowerment or anything like that, but things have changed now. So that's one important part. Showing the logos of the companies you're working with will probably give the biggest comfort. So hook them with the interesting value proposition. And then, of course, if you do have some logos, get those up there, because that is what the enterprises want to see. Because nobody wants to be the first one to jump in the deep end of the pool, right? But once you get a couple people jumping in, then it's a party and everybody's in there.
Yeah, some great insights there, Kelly. And I think after that initial hook, you get that first conversation, you learn a little bit more. And then sort of the next step in a typical process from our perspective anyway is the demo. And so, Loren, when you're demoing products, going through a deal flow with Plug and Play or outside of it, what do you look for in that demo?
So if I've come to the stage of having folks in to do a demo, that means I have quite a clear solution or I shouldn't say solution. I have quite a clear set of criteria of what I'm looking for that solution to solve. So the first is to just be very prepared with any questions that the person that you're providing the demo to may have, because it can be very frustrating sitting in a demo. It's fine, if it's a couple of them and you have to take it back because it's outside of your area of expertise. But when most of the questions are pushed off, oh, I think it's on our roadmap, but I'm not sure. Or, oh, this might be, I don't like mites. It needs to be clear. And, if it's a feature that I've expressed is of importance, having a clear line of sight that, yes, this is on our roadmap for Q2, not, oh, it will come at some point in the future, is not really going to cut it. And then I guess the other piece, just reiterating again, use that demo as an opportunity to ask me questions. If there are a lot of features and functionality that your solution provides, you still may not exactly know which ones will fit with what I need. So ask the questions and we can have a dialogue around that. If we need a follow-up demo, I'm always more than happy to give more time to a solution that I think could fit our needs.
Jesse, I see you dropped a question in the chat there. Do you want to jump in and ask it?
Well, I was just curious, Kelly mentioned, nobody wants to be the first jumper in the pool, but obviously somebody has to be, right? And, trying to find what are the characteristics of sort of an early adopter, like what should our founders here be looking for in a first customer?
Just clone more Lorenz out there, and then I think we're looking good at that standpoint.
Thanks, Kelly.
Yeah, I mean
I have 3 kids. You can maybe they're apparently 2 of them are clones of me.
yeah,
Just much
they're
smaller.
I mean the champion is the most critical part. I mean it's not just a champion, like, so okay, backing up, we have to be careful. There are a lot of innovation teams out there because the corporate function, especially in publicly traded companies, they're like, we got to create an innovation group because we got to be innovative, we got to look innovative. And like Calgary's really bad for that. There's like innovation groups in oil and gas companies, and it's almost like the water cooler crew because they're really smart people, very intelligent, but they don't have the buy-in for management to really actually get stuff done, right? So identifying a champion who actually really has say and has that buy-in and engagement from the corporates is super important. So that's definitely the main one. But also you will have a good idea when you get to that demo stage about the champion as well, right? One thing that I like about Loren is it's not, you don't just sit there and it's dead silent and you're given a demo. It's like, oh, can you do this? Have you thought about this? Have you do so that kind of whole, not brainstorming is the wrong term, but being able to adapt and think about things from that standpoint. Then you have kind of someone who's really thinking in broader terms than just where you get going. Of course, everyone's got to start at one point because you got to start somewhere, and that's half the battle. But then you actually have some really good potential to move forward.
Yeah, I totally agree. And I think that dialogue in that demo is definitely an important piece so that both parties can understand each other and get to know one another's products or problems and solutions.
Yeah. And
better.
ask what the goal is. No different than talking to an investor. Like the first thing to do is sit down is not to go into the pitch, just to be like, you took this meeting for a reason. So, you want to find out what that is. And then most importantly, just make sure that you know what they're trying to get out of it. That could be the same answer 8 out of 10 times, but them telling you, hey, I'm looking very specifically for this, then at least you can tailor some of that demo so it's not just the generic one.
Yeah, totally. Loren, I think there's a question in the chat here that is well suited for you. Cole asks, at what stage should you engage with corporations? Can you do this too early? So what are you looking for from a startup to have in place? Is it an MVP? Is it more than that before a conversation between you and them can be mutually valuable?
So this may vary between different corporations. I can't speak to others. Some of them have corporate venture capital arms and maybe they approach things differently. From my perspective, which I'd say is probably fairly, I would expect most people would have a similar opinion, but need something that we can do a proof of concept on, because it's very difficult for me to push something through to scale if we can't try it out. And like I said, if it's something, if we were doing some investments on our own, then we could kind of work together on it. But at this time, that's not something that we do at eCol. So yeah, we definitely need an MVP.
Yeah, and that's what we typically tell startups as well when trying to engage in the programs or whatever. The MVP is the bare minimum, and I think, like Kelly said, it gets easier to hook the more that there is, right? And so if there's proof of concepts or pilots already delivered with other logos or otherwise, that makes it just easier. Kelly, anything you want to add there?
No, yeah. I mean, it's always better to show, not tell. Sometimes we get into the habit of just throwing up some slides and talking, but if you do have something to show, that's really good. And then to your best ability, I mean, I know it's hard sometimes to tailor, especially when you're like multi-industry, to tailor certain demos for other industries, but you just do your best and try find those corollaries as best as possible.
Loren, beyond that demo process, seeing the product, testing it out, what does your due diligence process look like at a high level, broad spectrum? And do you have any sort of tips around navigating that for founders?
Yeah, this is a great question. It's something that's been evolving at eCol, and I'd say that's because when I started, I've kind of been the one building out this innovation program. So the way that we engage with startups along the way and the way we do our due diligence continues to evolve. So one thing would be to understand the sophistication or how long a particular company has had an innovation program, because there's likely more due diligence along the way, the more sophisticated they are, because they've learned from previous mistakes. This is one thing I can say. From my standpoint, and what I look at, is this something that can solve my problem? How can I scale it to the teams that are needed? Kind of those general questions, but something that is starting to get a lot more scrutiny, I'm even seeing the last 6 months, is around IT security. So for us now, and because we're a subsidiary of Wesco, and it's all very good stuff, but now we need to have companies do a third-party risk assessment on all of their different security certifications. And then I also need to do one internally. And that's something that then goes through our cybersecurity team for review. And then if necessary, sometimes even then has to go to the parent company's IT team. So a lot more layers around security coming along, that certainly, if anything is touching our data, there's a lot more due diligence.
Yeah, for sure. Security is huge for all of our partners. And I think
Yeah.
depending on your industry, it's more important for some than others, right? And so like startups that are engaging with our insurance or healthcare partners have like regulations they have to meet, SOC 2 requirements and otherwise before engaging with those corporate partners. And it's a huge piece that I think sometimes gets overlooked at early stage startups, and a lot of documentation and prep work that has to go in to continue those conversations. Kelly, in this due diligence process, enterprise sales cycles are long, right? And we all know that it's not necessarily a short sales cycle when you're engaging with prospective enterprise clients. And so is there anything you do during that due diligence process to keep that relationship going, keep the engagement going, other than just checking the box and going through the process with your prospective partners?
Yeah, no, that's a great question, because that's the reality, right? It's like you're working with your champions and everybody's frustrated as to how long the compliance people take to kind of get things completed. So you just have to keep staying in touch, talking about use cases. If you have new releases, like new functionality releases, keep those keep those top of mind. So, you have that constant communication for sure. I mean, you can get sync ups together without a doubt, but that's normally how it goes. Now, if the process is like really, really long to get through all that, then that's where you kind of got to look at your product and engineering to be like, is there something different we need to be doing? Right? SOC 2 compliance. SOC 2 compliance is like, we wouldn't have any customers without SOC 2 compliance right now. Secondarily, being able to, if you are in the data space, like Loren mentioned, we spent a long time engineering our model so that when we deploy that model, we could deploy in the customer's environment. So no data leaves, nothing leaves at all. It's not like a third-party system outside where you got to be crossing the firewall. Everything gets deployed. So that normally cuts down a couple months of the cycle. But with the advent, because we are using AI, we get lumped into all of the other AI companies, which most of them now are kind of LLM based. So you have to be ready for more regulation now, and most importantly, more compliance. So Nestle sent us their AI system security questionnaire now, right? So 98% of them, there's like 110 questions. 98% of them aren't even relevant to us, because they're all designed for generative AI on the inference side, right? Because you got Hallucid, you got a whole bunch of things there. And that's the majority of it. So the nice part is you got to check boxes, but it's NA. They review it and be like, oh, okay, well, this is a lot more easy, right? So some of the companies here, if you're AI, not even involved in the natural language space at all, just be prepared for that. But when it comes, it's still like you shouldn't be held up quite substantially from there, but you are going to be held up because they're just lumping every company in the AI space in the same bucket right now. So you got to be prepared for that.
Yeah, I totally agree. And it just is what it is, right? And you just have to go through that process. And be a good partner along that way. And so you've done all the box checking, you've got to the end, you like each other. It's time to start dating. And so, Kelly, what are some things you do in an initial implementation or a pilot or a proof of concept to set yourself up for success and have a more long-term relationship? What's important in that pilot stage?
Yeah, I mean, you need engagement from the corporation is number one. I mean, that's the most important. Having, like Loren came partway through our process, and like if it weren't for Loren, we like this thing would be dead in the water right now, right? Because you need someone internally there who's going to be championing it when you get the pilot going. It's like, hey, great, we got a pilot, but then if there's not the level of engagement that you're looking for, then it's really hard to drive value or show any value at the end of the day, right? And I mean, they're POCs in most cases, so you want to go in, you want to make sure you're fitting the use cases, you want to do all that type of stuff. But you also need to ensure that you have users or stakeholders in the organization who are going to invest the time. And that's the thing we got to keep in mind as entrepreneurs is people in corporates are super busy. And this is just asking them to do one more thing, right? So we have to kind of, we have to empathize with that a little bit or a lot to make sure that we want to show success. We want to know the success metrics, but at the same time, we want to make sure that there's enough engagement in order to meet those success metrics as well, right? Which is a really, really important one. And then most importantly, have it as a collaboration as well. And that's the key thing. If you're in a pilot, and we've been through these pilots, where they're like they're very kind of adversarial. It's like you're a vendor, and we don't like you right off the bat, and you got to do the proof to us in your business, versus like something that's more collaborative. It's like, hey, let's try and make this work. Here's the success criteria. We got to meet the success criteria to move on, but let's work together to kind of get this done, right? So us as entrepreneurs, we also have to be able to triage those as well. But again, all comes back to the engagement level of the corporation.
Right, yeah, and those proof of success metrics are key, right? Meeting the outcomes at the end are essentially a requirement to proceed with the relationship. If you fall flat in your POC or pilot, it's going to be difficult to continue that interest and that engagement. Loren, do you have anything else you want to add around POCs or pilots?
Yeah, the one thing I would say, I shouldn't say anything to add, but to reiterate really the importance of setting those key performance indicators, because if they're not set, then you get to the end of the pilot, and if your internal champion needs to sell that up for a longer term agreement, you have no data points on what it's done. So that's very, very important. And then the other thing is to ensure that your champion, not only do they need to be accountable for success, but in terms of engagement, it has to be with the right people, because some people are really super users, and it's important that the champion figures out who those super users are. I could kind of generalize, it does tend to be younger people, but that's not always the case. But if you can get a spread of super users across different departments, or it kind of depends on the nature of your tool, right? But you need a few super users, because I'd say there tend to be more people that are used to doing things the way they always do them, that this really does just seem like more work. But if you can find the few that are really excited by it, they will help drive it forward, because you just have to get critical mass. Like I've seen this on the flip side. I've sold tech into big companies as well. And you have to build on the initial momentum, check in on a very regular basis, bi-weekly, weekly, until you get that critical mass, and really embed it within their processes. The more you can find a way to take your solution and embed it within an existing workflow, or a workflow that's a little bit modified, the more success I've seen in my experience. Yeah, that's exactly right. Corporate status quo. That's the story of my life. I'm always shaking up the status quo, but I have to do it with a smile on my face.
Yeah, that goes back to Kelly's, you don't get fired for implementing Microsoft or IBM, right? Brendan had a question in the chat here. So he said, we get this over and over from clients for pilot success parameters. We just need to see that it works. So many problems with that statement, but pushing for a refined definition can be tricky. Any suggestions on defining parameters around a successful pilot?
So I'll just give an example straight from our engagement with Chata. With Chata, like Kelly mentioned, we're able to translate our natural human language into database query language. So I said, okay, I'm going to just set whatever it was, 15 or 20 queries that I need to make work. And then I circulated those internally among the powers that be. And admittedly, I probably picked some that I knew we could totally achieve by our target date, but that's fine. I guess that's what you want out of a champion. And then we targeted hitting those. So with that, it will depend on what your solution is, but really drill down. How could we measure this? Okay, is that a sales growth? Is that a price or a cost savings on a certain SKU? It like really depends on the business, but you have to push to go a level deeper. And to Kelly's point, if you've developed a collaborative relationship, then hopefully that conversation should be easier for the two parties to, work through that together.
Yeah, and like it just depends on case by case basis. I mean, for what we're doing, there's some data warehouses where there's literally trillions of combinations of database queries that can be written. So how do you come up with the best criteria so you get the most breadth at the same time without having, tens of thousands to hundreds of thousands of different pieces from there? So picking kind of an acceptance set to where you can look at it, you can make sure that, okay, this is generating the right queries in this particular case, and then using that as a criteria to move forward. That one's a little bit more gray area, but for probably some of your solutions, it's a lot more cut and dry, right? Which is there's some metric they measure right now, whether that's productivity or sales or whatever it may be, maybe lead generation, something like that. And then they pilot your solution, and then you have something tangible to measure against. So it really depends on a case by case basis.
And to add on to that, I wouldn't be surprised if many companies maybe don't measure the metric that should be measured to prove the success. So if that's the case, find a way to work creatively together to help them find a way to measure the metric that needs to be measured to show the success.
Yeah, all very, very great points. Kelly, I want to we've been pretty high level here. So if we can bring it down to real world examples, from your experience, cycle that started at the beginning and went through pilot and had success, and maybe an example that wasn't as successful, and some reflections on those two experiences would be appreciated.
Yeah, I mean, the one, whether it's the most successful or not, I don't know, but the one we're already launched, we've been expanding through the organization, everything else is Nike. So that's probably one of our earliest relationships, which was, we were very fortunate to get in, because we didn't really have a lot of customers at that standpoint, right? So we were fortunate through a introduction into the data group there to meet them, go through what we're doing, had a really good, an amazing champion as well. Again, it all comes down to the champion. And so we ran 2 paid pilot projects. We did not do free projects, and we don't do free projects for a reason, because they're less valued, right? We can talk about, which is probably going to be an important part to talk about, how the world has changed these last 6 to 9 months about budgets and everything, which I kind of have some advice to give, at least from what we've been seeing and how we've been adapting. But like backing up to then where they had a lot of money for projects, pilots, software licensing, everything else. We ran 2 paid pilots. One was with the product group, so the group who, you know, designs and figures out what the next LeBrons are going to look like and apparel and everything else. And then also the global merchandising team, who is kind of the bridge between the sales and the product. So we ran 2 separate ones, 2 separate data warehouses. We ran those. We had the success criteria set out, which is again very similar to Ecole from that standpoint. Those actually went very well, and they did a very limited release to production. So they picked 50 people in each group, who again were more identified as the power users. And then those power users went through it, and then from there, the power users started talking to everybody else, and it just kind of kept going and kept going. So we have those 2 groups, and then they've also came to us with 2 new data warehouses they have on the materials and purchasing for the footwear, and materials and purchasing for apparel. And then also we're talking with the memberships group right now as well. So from you know, and there's a lot of bumps along the way as well, of course, because they've changed their data warehouse structure 60 times, right? So pain in the butt for us, but it also shows the ability to adapt as data warehouse structures are changing, because that's the real world, right? You're not one and done your data warehouse structure. So that was good from there, but cost a little bit more time. And then, of course, with some of the corporate restructurings, which we're all going to go through on this call if we're selling to the enterprise, right? That's how it went. So that one's a good success, because now we're expanding in the organization, which I think, you know, in enterprises is what you want to do. You want to start with one business unit and kind of expand from that standpoint. The other one, which we didn't lose, it's just very, very slow, and we're finally in a good spot to go to production. I'm not going to name the name, but definitely an airline. So an airline we're working with, great airline, and we're working with the airline, and the data warehouse we started working with was really difficult. Like really difficult. And not to go technical, but like you have your base tables in a warehouse, and then you have these aggregated views and then another one. So one of the challenges is, even though we generate a query within less than a second, it might take 2 minutes to execute on the database. And that's no different than a human typing out the query and doing it. So that one, we did a horrible job of explaining that time cycle to the initial set of business users, right? Because it's something that's out of our control. But at the same time, there's going to be a ton of things in an enterprise infrastructure that your companies are totally out of the control for. But the business users, or the people that are going to be the users, they're not going to know that intuitively. So you have to say, okay, this is the cycle. If you're asking a question and you're sitting there for 2 minutes and you're not getting anything back, this is why that is. So it's an expectation settings, which we take responsibility for sure. We have to be able to set those expectations. So we've had that case, which is definitely one. And then we've been getting better and better with setting expectations. But when things go sideways is when expectations aren't properly set. So that's my long-winded way of saying that's the important part.
Yeah, no, thanks for sharing those examples, Kelly. Greg has a question in the chat here around pricing pilots. How much do you decide to charge for a paid pilot? And he said he's heard a few different schools of thought here, and has also heard a tip that you should ask for enough that they have to ask their boss for approval. I don't know what that means in like the context of different organizations, but any thoughts on pricing paid pilots?
Yeah, I mean, 2 years ago, well, I shouldn't say 2 years ago, maybe a year and a half ago, 50,000 US is like a pretty, if you're in a bigger kind of enterprise, 50,000 US is pretty straightforward over, 3 to 6 month period of time, depending. That was kind of pretty standard. Now, a lot of that funding has dried up, right? So you got to be a little bit more careful. So the budget wise, That normally comes out of one bucket. And then you have, does it come out of the software licensing bucket? And those budgets are getting smaller and consolidated and everything else. So something to think about is, and again, I say 50 grand, that was kind of like ours based on time, effort, size, scope. There's a whole bunch of different pieces there. But normally from an approval level, that traditionally is an approval level that typically director level, can normally do, of course, with keeping the VP in the loop. But one thing you may want to think about is if there is engineering time involved or some other type of resources. A lot of organizations have this bucket of money that they approve, which is for consultation, engineering, outsourced something. Okay. So sometimes you can get in through that budget. You say, we're going to provide you a free trial for 6 months to the software, right? And then you're not doing things for free because there's still that money available coming out of that consulting. 2 deals we're working on, this is what our champions told us is the best way to access budget. Can we rejig the SOW? Can we rejig the agreement so that it's worded this way so that we can draw upon these things? So coming back to the champions as a collaborator for sure is always an important one.
Great insight, and just always going back to you're building a relationship, you're collaborating together, and yeah, it's important to remember that's what it is. Loren, any additional thoughts or reiterations you want to express around the paid pilot negotiation?
Yeah, from a budgeting perspective, admittedly, this is something with eCole that we're still continuing to evolve and figure out the best way to do it. One thing I can add to this is it's important to think past the point of the pilot, because sometimes, with the pilot, that may come through the innovation team, but now that you've proven your pilot successful, now you need a new champion or owner, and that person should be the budget holder. Because I've seen companies that we've done a pilot with a little bit before my time, whereby the pilot in all respects maybe was successful, but there was no clearly identified owner afterward to hold the budget or go and get the budget for the longer term solution. So if it's, whether that's supporting a sales team or that's HR operations, whatever, it's important to keep a line of sight of who that individual needs to be.
Awesome. It's Loren, pilot's done. It's time to negotiate a grander agreement. Everything went well. You're confident in the ability of this organization to deliver and the technology's impact on your business. What are some best practices for taking those next steps and building that relationship into the future?
In terms of scaling it up, is that what you're referring to? Okay, well, actually, this is something we're working through with Chatter right now. This is probably a little bit particular to eCole's circumstance, but because we're owned by Wesco and because it is .ai in Chatta's name, there is a lot of procedure, rightly so, that we need to now go through, because we have to take this outside of eCole into Wesco. And something that I'm starting to do internally is to figure out who are the folks on the Wesco side that I can shop this around with, so that I can start to get some excitement and buy-in around this, because they're seeing a ton of technology. So I suppose, not a word of caution, but as some insight, it's helpful to think through, those challenges alongside your champion, because if they are facing the constraints around public parent company, there will be more relationship building that individual needs to do internally to help scale this out. And it's important not to lose sight of that. So I guess I've kind of half answered your question, Jacob, because Chatter is really the first in my experience that we're working through to doing our best to scale it.
No, I think that's very helpful, Loren. Thank you. Kelly, do you have any thoughts around conversion and retention in terms of the sale and all the work you did up front and maintaining that revenue over time?
Yeah, I mean, we've been lucky in that instance to date. There's, been a couple, of course, close calls. But we've been pretty lucky that everyone we've gone through that kind of paid pilot phase, we've we've continued on with and moved on. So that's good. We do work both in the enterprise and with ISV, so software companies who just want to integrate the API and have their users, work with the data a little bit easier. So we've been quite fortunate that way. But again, our N isn't high enough yet, right? Like typically with churn and stuff, it's high volume, right? If you're anything less than like 50, there's not enough signal in there to figure out what a consistent churn rate is. So I'd be surprised if most groups on the call would maybe have over 50 enterprise customers, for sure. But I would say instead of, well, maybe churn, I'm thinking is the statistics, but retention for sure. It's relationships. It is absolutely relationships. And even though some things are harder or more difficult, right? Like some of the things we're talking about that Loren just brought up, going through additional layers and additional everything else. You got to remember, going through that also creates competitive barriers for anybody else who may come in, maybe from a smaller company or startup area. You go through those hoops, you'll keep jumping over them, and maybe others who are trying to get into larger organizations might trip and fall over those. So definitely super critical, but you have to be patient. But at the same time, you gotta be there if the champion needs something from you. That's the big piece, because they're fighting their battles. You're both in the trenches together, and that's the important part.
Kelly, going back to a point you started to make earlier, looking into the future and in the present climate, what are some trends or high level things that are going on in the market and otherwise that are impacting the enterprise startup ecosystem and the technological innovation that can come out of those engagements?
Yeah, we kind of went about 6 months ago from the Wild West and everything, and now people are starting to pump the brakes, right? It's like that. I don't know if everybody read that MIT article about when ChatGPT first launched, and there's 100 million people in America who could be legally fired from their jobs for breaking confidentiality clauses, right? So it was a Wild West before, and now maybe it's more than 6 months ago, maybe that was 9 months ago. But now it's kind of swung the pendulum the other way, which is like high regulation. So make sure you got your messaging done from that, but also in the economic environment where the stock market looks good, but when you're looking at balance sheets of a lot of these companies, like things aren't really looking that awesome, debt levels, everything else. So organizations have started, being a little bit tighter on budget. Okay. So as an example, Nike had 20 other projects going on with various softwares outside of kind of the main approved ones. All of them got cut last quarter. 100% of them got cut. There's no more budget for that type of stuff as of right now. So then it comes down to what I was mentioning before. How do you work with the champion to figure out what the budget is to get, right? Because a software license, now they got to go for budget approval for that, versus another bucket of money, if you fit that criterion, to be able to access that to get things going. Because everyone on this call is clearly super confident about their product or service and how that's going to work in the real world. You just need to get things going, and then you can show the value from there. Now, if there's any VCs on the call, they're going to hate that. Oh, you don't want to have your agreement saying hours. It's got to be recurring, everything, da 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 da. But I mean, the landscape's changed. People just care about revenue, right? Do things that, what was the term that's thrown out there? You have to be scalable from the enterprise standpoint, like Loren says. She's got to make sure that the system is scalable. But as an entrepreneur, until you're at whatever $3 million USD recurring, whatever it is, do things that don't scale. Get the revenue, right? Get the revenue. That's the most important part for sure. And then you can start thinking about scalability and process after the fact.
Loren, are there, kind of speaking to what Kelly said about software and budgets and areas drying up and areas that are still exciting, are there any areas in particular for you and Equal, that technologies or otherwise, that you're super excited and willing to engage with right now.
Sure. So I definitely will reiterate, what Kelly said around the scrutiny the last 6 to 9 months. Hands down, we've been seeing that. But if I look further out, things that I'm, at ECOL personally excited about, I don't know that this is groundbreaking, but it's warehouse automation. We have 65 branches, but a lot of them are not, there's no automation. And, we're exploring what centralized distribution could look like. And if we're able to move that way, then there's a lot of technology on that front that I'm excited about. The other piece for me, and this is a little bit further out, but I anticipate more scrutiny around Scope 3 emissions to be making its way to Canada in the near to medium term. And so I expect to see more technologies able to assist with tracking and reporting on that front. And then, currently in the near term for me continues to be solutions like Chatta.ai. Basically, I'd rather have my folks spending 80-90% of their time finding ways to chase opportunities and to do things better rather than wasting 80% of their time finding information to then go and spend 20% of the time making a decision. So that's what's on my radar.
Yeah, that makes sense. Did we miss anything? Is there anything the two of you think we need to address in this panel before opening the floor to questions?
I mean, the only other thing that'll get enterprises' attention more so is just, are you like an internal ROI solution, like efficiencies, cost savings, type of solution? Or do you have a value proposition for revenue generation? Right? Either expansion revenue for the people you're working with or new revenue streams as well. So if you can provide ways that will generate new revenue streams via your technology, that is a really good way to get a lot more attention versus just the cost savings piece. Even though, again, everyone's more concerned about budgets, but if you're generating new revenue, then it becomes an easy decision at the executive level.
Lauren?
100%. Absolutely agree with that. And sometimes it's not that clear from an initial pitch. It can kind of get muddled, and then I catch myself thinking, wait, so what is this exactly? So to Kelly's point, actually making that clear. Yeah, very good.
I think we have about 6 minutes left here. And so I want to open the floor to any questions. If you have a question, you can drop it in the chat or raise your hand and unmute yourself. But please, floor is open if you'd like.
Trying to think of a question, guys. You covered so many topics on this this panel already. Very informative. Oh, there we got one. How long does it typically take from initial VC talks to signing a deal? So maybe this one's for you, Jacob.
Yeah, I think that one's a little outside the scope of the panel, but it varies. It varies firm to firm. And everyone has their own process and whatnot. I can tell you plug and plays. Ours starts with an initial call. That call is arranged, and I kind of count that as day one. And then from there, we'll do a demo. If it's me leading the deal, I'll loop a partner in, they'll have a call. And from there, we complete our due diligence and go to an investment committee. And we try and keep that as consolidated as it needs to be. Give founders the respect of a fast answer when we can. And I'd say anywhere from 4 to 6 weeks is probably the total amount of time that process takes for us. And it can be faster and it can be slower depending on round dynamics and otherwise, but I'd say that's sort of a general guideline for us personally.
Yeah, and in the industry, yes, it varies. I mean, I've heard stories of, initial conversations 6 to 12 months before final money in the bank. So it really depends. But that did spark a question here for Lauren and Kelly. Thinking about, startups like being funded, right? There is obviously some risks there when you're starting to implement that company's product into your corporation's processes. The company ends up going under. You've done all this change already, and that there's a lot of costs associated with that. So kind of like, where does that come into the decision making and how well funded this company is when you're deciding to purchase? And also thinking then, Kelly, on the other side, often during due diligence, the investors will ask to speak maybe to some of your corporate partners, and how do you manage, that communication?
Yeah, I'll start with the second part. So that you just, if you got a good champion and even though they're busy, they're willing to spend the time to talk to investors. So like Nike does we're raising a Series A right now and they do our diligence calls right now because they don't know, want to just talk to everybody you're working with. They want to know how, because they care about the expansion part of it, right? Because that's where they see the big upside. So we're very, very fortunate that they're the two of our champions in there do these types of calls. But on the other side, you're right. So I mean, you can do kind of, full audits and everything else into the organizations, but that's just not cost effective for an enterprise to spend the money doing that stuff. So how you get around that is just if you have some customers who are willing to provide references for you, then, and especially if they're decent brands and logos, that normally is a pretty good due diligence way for people to check the boxes that that the company is legitimate. And of course, then they can also go into Crunchbase and check out who's raised money when. But I mean, if I could turn back the clock, I definitely would have tried to bootstrap a little bit more than we did, for sure. Just for those of you who can do that, I would definitely recommend doing that a little bit more, which doesn't give you the fundraising history, but at the same time, you'll still be financially solid.
And there's a question in the chat directed at VCs, but I think it's a good one for you as well, around cold emails and whether or not they actually get read and if they're effective. Do you have any thoughts on cold emails? And then I'll share mine.
I get a lot of emails. I actually would be probably more likely to take a cold call if you can get a hold of my phone number than an email, because honestly, I don't even have notifications on my email because most of the time they're just things that I don't read. People that need me message me on Teams. That's maybe my personal opinion, but it's just my inbox is flooded. LinkedIn might be slightly better. I find I get a little bit less of that on LinkedIn, but honestly, a phone call would probably get my attention the most.
I have the counter perspective on LinkedIn. I get a lot of stuff on LinkedIn that's pretty easy to ignore, but I do read cold emails. I think every VC firm has a different perspective on cold emails. I think some people require a warm referral, some people read cold emails, and so it's going to be case to case there. And I do think there's an effective strategy with cold emails. The generic spray and pray, I have a template and I send it to everyone, will likely not get you anywhere, in my experience. I find that well thought out, well researched cold emails are the ones that will get a response. Make sure you know the thesis of the firm and know that you are a fit for it, and express that in a concise manner in an email if you want that cold email to get answered. But I think to answer the question, yes, VCs read cold emails depending on who they are. But it's important to make sure that email is done effectively and not generically.
Yeah, that's true. I do skim them. I don't disregard, I skim them. So you have to pretty much catch me in that very first line, or I'm like, oh, it's just another one of something completely irrelevant.
Yeah, well, and we are at time, Jesse. So I think my conclusion is lots of great insights here. And I think the main takeaway for me was enterprise startup relationships are all about that relationship building. So maybe a fitting takeaway given that Valentine's Day was just yesterday. Anything from you to wrap up here, Jesse?
Just a big thank you to you, Jacob, and the Plug and Play team for putting this together, and of course, Lauren and Kelly for joining us today and providing their insights. I know you're both busy people, and you can tell from the engagement in the chat. And I was looking at people on the video, everyone was madly taking notes. So very informative session. This will be living on our YouTube page, so you can always go back and watch the recording. And with that, I will let you